Welcome to the Deep Dive. We're here to cut through the noise, especially when it comes to complex topics like, well, stock analysis. It can feel pretty overwhelming sometimes.
It definitely can.
So today, we're taking a deep dive into Lockheed Martin Corporation, ticker LMT, a real giant in the security and aerospace world.
Absolutely.
Our mission really is to unpack what's going on with them, looking at recent financial reports, what analysts are saying, company news, all of it to help you get a clearer picture of where LMT stands and what its future might look like. We've sifted through quite a bit: detailed financials, expert takes, news headlines, the works.
That's right. And just for context, Lockheed Martin, it's a global player. Security and aerospace, they do the whole life cycle research, design, development, manufacturing, integration, and keeping these complex systems running.
Right.
They operate through four main parts: aeronautics, missiles and fire control, rotary and mission systems, and space. Big customer. Primarily the U.S. government, but also a lot of foreign military sales. And just to set the scene on the stock itself, the last close price we saw was $419.39. Now, what's interesting is that our analysis points towards a fair value around $478.01, and analysts, on average, are targeting about $476.78.
So potential upside there compared to where it's trading now.
Yeah.
Suggests maybe the market's focusing too much on the short term.
Could be. It suggests there might be some underlying strength the current price isn't fully reflecting.
Okay, let's dig into that. We often talk about a company's economic moat, that competitive advantage that protects it.
Oh.
What's Lockheed Martin's secret sauce here? What gives them that edge?
Well, Lockheed Martin has what analysts consistently call a wide economic moat. That's pretty significant. And it's not just one thing. It's built on several pillars.
Okay.
First, intangible assets. Think about their unique battle-tested technologies: stealth, advanced electronic warfare, those hypersonic weapons programs, things like the F-35, F-22, ADA, Aero, CPS.
Right, the high-tech stuff.
Exactly. And here's a key point. The F-35. It is literally the only fifth-generation fighter aircraft currently in production in the free world.
The only one. That seems incredibly significant. What does that really mean for them?
It's a massive advantage, an unparalleled market position for a critical piece of hardware. It basically means they have significant pricing power in a key defense area, and it creates a huge barrier for anyone trying to compete. If a nation wants the latest and greatest air power, Lockheed's F-35 is pretty much the only game in town for a new build.
Wow. Okay. What else contributes to this moat?
Second, you've got high customer switching costs. Once a country integrates Lockheed's complex systems like fighter jets or missile defense into their national defense setup, ripping it out and replacing it with a competitor system, it's incredibly expensive and complex, maybe even impossible in some cases.
So it's not just buying a product, it's becoming deeply integrated, like an ecosystem.
Precisely. Which leads to the third point: strong government relationships. These aren't built overnight. Decades of working closely with the U.S. government and allies. It's about deep strategic partnerships, trust, reliability.
Makes sense.
And this enables their capability as a mission integrator. They can pull together these incredibly complex, layered defense systems. Think something like the proposed Golden Dome initiative. Very few companies can handle that level of integration.
Okay.
And finally, let's not forget the robust backlog. Our research points to a backlog of around $167 billion. That gives them fantastic visibility into future revenue, consistent demand, and forecasts suggest it could hit a new record in 2025.
Okay, $167 billion backlog, unique tech like the F-35, high switching costs.
Yeah.
That sounds like a fortress.
It is a strong position.
But despite all that, their Q2 2025 results, which came out July 22nd, they seem to cause some ripples. The share price took a noticeable hit. What happened there? What caused the turbulence?
Yeah, that's right. Despite the strong moat, Q2 definitely presented some challenges. The bottom line was a net income of $342 million, or 1.46 per share. That's a pretty sharp drop compared to the year before.
Oof. Why such a big drop?
It was mainly driven by some significant program losses. We're talking about $1.6 billion in pre-tax operational losses across a few key programs.
$1.6 billion. Okay, that's a big number. Can you break that down for us?
Sure. The largest piece, about $950 million, was related to a classified program within their aeronautics segment. The company cited issues with design, integration, and testing challenges that turned out to be more complex and costly than they initially thought.
A classified program. Okay. What else?
Then there was a $570 million loss on the Canadian Maritime Helicopter Program, the CMHP. This was tied to a decision to offer enhanced capabilities and upgrade the existing fleet during ongoing negotiations.
So investing more in that contract.
It seems like it. And lastly, a $95 million loss on the Turkish utility helicopter program, TUHP. That one was directly linked to U.S. government sanctions affecting their ability to perform on the contract.
So a mix of internal execution challenges and
Yeah.
external geopolitical pressures. Any other hits in the quarter?
Yes, a couple more things. There was an impairment charge linked to the Next Generation Air Dominance, or NGAD decision. Basically, they weren't selected for a major future program.
Ah, okay.
And they also set aside a reserve for an uncertain tax position. This relates to a disputed IRS claim for an additional $4.6 billion in income tax. Lockheed is actively appealing that, but they had to account for the possibility.
Wow, $4.6 billion tax dispute. That's considerable.
It is. So all these things together, they reduced the GAAP EPS, that's the standard accounting earnings per share, by $5.83. And on top of all that, their free cash flow for the quarter was actually negative $150 million.
Negative free cash flow. How
Yeah.
did management explain that?
Management attributed that primarily to timing issues, suggesting it wasn't necessarily an operational breakdown, but more about when cash came in versus went out during the quarter.
Okay. So facing these pretty significant setbacks, what's management doing about it? Are they making concrete changes?
They stated they're taking it very seriously. They're, quote, redoubling their focus on program management,
Yeah.
implementing more comprehensive risk identification and correction plans, especially for that classified aeronautics program.
Mm-hmm.
There have been changes in program team management, and the new CFO, Evan Scott, is apparently leading a push for more rigorous, higher-level scrutiny and program reviews, bringing in broader expertise from elsewhere in the company.
So more oversight, new eyes on the problems.
Seems to be the plan.
Hmm.
They're also looking at restructuring some contracts to better manage risks, and they did point out a policy they put in place 5 years ago aimed at avoiding, unbounded future risk when they bid on new work, trying to prevent repeats.
Right, trying to build in safeguards.
Yeah.
Okay, that sounds like they're actively addressing the issues. So let's pivot a bit. Moving past these Q2 challenges, what signals are they sending about the future? What are the potential growth drivers for Lockheed?
Well, despite the rough Q2, management actually reaffirmed their full-year 2025 sales guidance. They still expect between $73.75 billion and $74.75 billion.
Oh, interesting.
And importantly, they also maintain their 2025 free cash flow guidance, keeping it in the $6.6 billion to $6.8 billion range.
Okay, so that supports the idea that Q2 negative cash flow was just timing.
Exactly. It strongly suggests they expect cash flow to recover in the second half of the year. However, they did lower their guidance for 2025 segment operating profit and overall EPS, reflecting those big Q2 charges.
So sales and cash flow holding up for the year, but profitability takes a hit. What about looking further out, like into 2026?
For 2026, they're anticipating a slightly lower free cash flow, maybe closer to $6 billion. They attribute this to ongoing investment needs, advancing complex programs, boosting production capacity, plus a significant $1 billion pension contribution.
So still investing heavily in the future, even if it dips cash flow temporarily.
Right. It indicates they're prioritizing long-term growth and positioning, and the fundamental demand picture still looks strong. Global defense spending is up, especially for things like munitions, driven by, the current geopolitical climate. And there's a focus on homeland security, too.
That makes sense. What about strategy shifts or new tech? You mentioned they weren't selected for NGAD. How are they adapting?
Yeah, that's a key point. While losing NGAD wasn't ideal, they're making a strategic pivot. The plan is to take the advanced R&D they did for NGAD and apply it to enhance their existing platforms, like the F-35 and F-22.
Upgrading what they already have.
Exactly. They're aiming for, and this is a direct quote, 80% effectiveness of sixth-generation capabilities at 50% of the cost. Basically, offering a more cost-effective path to next-gen air power by leveraging their current dominance. It's a pretty smart way to adapt.
Yeah, that does sound pragmatic.
Plus, they expect some major contract awards soon, F-35 Lot 1819, various missile programs, which should feed into that record backlog we talked about.
Okay. Any specific new products or investments announced recently?
Yes, in Q2, they highlighted completing the F-35 TR-3 hardware integration, that's Technology Refresh 3, crucial for future upgrades. They also had successful tests for the Long-Range Discrimination Radar, LRDR, and the Aero Hypersonic Weapon, which is now moving towards production. And the Conventional Prompt Strike, or CPS missile, also had a successful flight test.
Lots of movement on the innovation front then.
Definitely. And they're putting money behind it. They invested $800 million in Q2 alone on infrastructure and R&D. That includes plans to boost munitions manufacturing capacity and even a public-private partnership for rare earth magnets, which are critical for defense tech.
Okay, so despite the Q2 stumbles, the long-term strategy seems pretty active. Now, when analyzing a stock like this, it's always good to weigh the different perspectives. Can you sort of summarize the core arguments for the bulls and the bears on Lockheed Martin right now?
Absolutely. Let's start with the bull case. The core arguments here really center on that dominant market position and the wide moat we discussed. The F-35's uniqueness is a huge factor driving international demand.
Right.
Then there's that massive $167 billion backlog providing revenue visibility. Their critical role in global security, plus leadership in emerging tech like hypersonics and mission integration. We'll see these as strong long-term growth drivers. And finally, their strategic adaptability like the NGAD pivot shows they can innovate and leverage existing strengths effectively.
Okay, so strong fundamentals, key technologies, and adaptability. What's the flip side? What's the bear case?
The bear case focuses heavily on those Q2 program losses, the $1.6 billion hit. Bears worry this might signal deeper issues with program management, cost control, or risk assessment on these really complex projects.
Execution risks, basically.
Exactly. Then there are the profitability pressures, the downward revision for 2025 profit, the expected dip in 2026 free cash flow due to investments and that pension contribution, and finally, those legal and regulatory clouds, the ongoing securities fraud investigations and that big disputed $4.6 billion IRS tax issue. These create uncertainty and could potentially lead to significant costs or divert management focus.
Okay, that lays out the push and pull pretty clearly.
Yeah.
So bringing it back to the stock price, where does this leave the valuation discussion?
Well, connecting these arguments back to the numbers we started with, the current price around $419 versus a fair value estimate near $478, and analyst targets even higher.
Right.
The takeaway from our source analysis is that the market might be overly penalizing LMT for its short-term financial setbacks. The argument is that the current price perhaps doesn't fully appreciate the long-term strengths and the enduring demand.
Interesting perspective. Before we wrap up, maybe touch on a few key financial metrics for listeners.
Sure, quick rundown. Dividend yield is currently around 3.11% with an annual payout of $13.05 per share. The next payment is expected September 2nd, 2025. PE ratio, trailing 12 months is 23.29, but the forward PE is lower at 15.35. Market cap is just under $100 billion at $98.26 billion.
Okay.
And here's a really notable point, especially for balance sheet watchers. Total debt took a massive dive between Q1 and Q2 2025. It went from $20.3 billion down to just $3.12 billion.
Wow, that's a huge drop. How do they manage that?
It's likely a combination of factors, maybe strong operational cash flow earlier in the year, perhaps some strategic financial moves. But the bottom line is it signals a much healthier balance sheet, giving them more flexibility, which is especially important given those Q2 charges. Also worth noting, shares outstanding have been decreasing steadily, showing they're actively buying back stock, returning capital to shareholders.
Okay, good context there. So we've journeyed through Lockheed Martin's recent performance, dug into its strategic advantages, the challenges, and looked at the road ahead. We've pulled from financial reports, analyst takes, management commentary. The aim here, as always on the deep dive, was to give you a clearer, more nuanced understanding than just reading headlines. Hopefully this has provided some valuable insights, maybe even a few aha moments into a complex company like Lockheed Martin.
And it really leaves you with a core question to think about. Considering Lockheed Martin's undeniable importance in global security and its clear long-term investments in key technologies, how do you personally weigh these recent significant financial setbacks against its enduring competitive strengths and the ongoing, arguably increasing demand driven by global events?
That's a great question to ponder. We certainly hope this deep dive into Lockheed Martin has been valuable for you. If you found this discussion insightful and you want more analysis like this, please do consider subscribing to our channel and hitting that bell icon.
Yeah, your support really helps us keep digging deep into these topics.
It absolutely does. Thanks for diving deep with us today.